Alrighty. Welcome to Flight 414. No, I'm playing. It was good, guys. We are live for our weekly, preparation for the markets. Of course, primarily the futures market. Today is April 14th, and we are going to be, short and sweet. You feel me? In this thing, please excuse. If you hear any background noise, let me make sure that you guys can hear me. But yeah, of course, we're gonna start off, pretty similar this week. We've been pretty accurate. I mean, if you watched last week's market outlook and you watched the market outlook before that, as far as our weekly expectations, we have been rather accurate on those things. Now, I definitely want to go ahead and address. We've seen dollar reach the objectives that we've been looking to see them reach on a higher time frame, and how is that going to affect what we're looking to see? We'll find out next time. All right, cool. So this week coming up, April 15th, we have a high impact Monday coming through, right? So Monday we have 8:30 a.m. news, retail sales. So we're gonna want to be prepared for that. Oh, forgot about it. I forgot about the music, guys. My bad. Forgot y'all could hear it. All right, cool. We should be Gucci now. All right, yeah. So forgot you guys can hear the music, but what I was saying was that we've been pretty accurate so far, as far as our expectations go in the market. The past 2-3 weeks, we've seen both our manipulation that we were expecting at the beginning of the week, and then the reversal towards our target and targets hit for the past 2 weeks. So where do we expect the market to go now? Which we're going to be getting into. Also, today is April 14th, tomorrow being April 15th, this Monday coming up. So we're going to take a look at the economic calendar, and like I said, today is a high impact. Monday is going to be a high impact news day. All right, we're going to see high impact news at 8:30 a.m. as well as some small, other small releases throughout the day. But what's good with these guys over here? But yeah, so we're going to be looking forward to seeing what opportunities we can see in the market, even as soon as tomorrow, Monday, on Tuesday after Monday, we're going to be having Federal Chairman Powell speaking during the afternoon session. No high impact news during the day, right? So we do have some news events, but none of them are high impact news, right? Meaning, 3 stars, a 3-star news event, which is what we would want to pay attention to. Wednesday, again, no high impact news events other than that crude oil inventories. So Tuesday and Wednesday are looking weak. Just as far as liquidity events go, not to say the markets won't move. Markets gonna move, of course. And Thursday, we have Philly Federal Manufacturing Index, which is, and initial jobless claims. So 2 high impact news events during New York, 3 high impact news events, existing home sales. All right, so we do have some activity there on Thursday. So this is interesting news release, just because Monday has more liquidity events. That's what I like to call the news, right? Because at the end of the day, the news to me doesn't affect the markets. It's just the excuse for the markets to do what the market's going to do. I knew that was going to happen. I still forgot to mute it. All right. But it's just an excuse for the markets to do what the markets are already going to do. And when I see, usually when we have a Monday where there's no high impact news, I'm just going to kind of just lay off the gas. I'm not going to be in a rush to really trade that Monday. Even may make the decision not to trade or look for opportunities that Monday, because maybe it's a day like last week where CPI was the following Tuesday. Right. So those are, the circumstances where we would avoid a Monday. But when, you have a day like, this, right, where we're going into a Monday with high impact news, we're going to go into what happened on Friday and Thursday and stuff like that. But then you also have Tuesday and Thursday with not necessarily any major news releases. You have Federal Chairman Powell speaking at in the afternoon on Tuesday. And what typically happens when Federal Chairman Powell speaks is that we get a lot of manipulation before his speech, or we get a lot of consolidation or accumulation before his speech while the markets hesitate on what he has to say. Right, you have a lot of people who are speculative traders, or the banks, the biggest players, right, the banks, institutions, they're all going to be waiting on what the Fed has to say. So sometimes, with that being said, wouldn't be surprised to see a very big early move, and until even there or going into Thursday, we may just see choppiness, or just maybe one-sided price action in between that, something dramatic, right? So we're gonna look into that. So yeah, it's looking sweet. And you guys let me know, if you guys get value from these market outlooks. Of course, leave a like, leave a comment below. Appreciate you guys that have been commenting. If y'all have any specific videos or any specific questions, you can definitely leave them in the comments or send them to our email. And I'm actually in the process of creating all those videos, especially based off of the questions that we've already been asked, right? So if you have any questions, feel free, anything that has to do with futures, being profitable, strategy, anything that has to do with trading, feel free. All right, so now let's go ahead and switch over to TradingView. All right, and we're just gonna have our weekly I told you so moment, right? It's just something that we do here as a squad, just really where we look at the previous week's price action based on what we were expecting or spoke about. And so last week, all right, we spoke about this let's see what's going on here. 1 second. On the weekly, all right, we have this weekly fair value gap, okay, here, low of this candle, the high of this candle, all right. We have this weekly fair value gap. This was the candle of the week before last week. So when we were looking at market outlook, all we could see was this. Okay. And I told you guys that, last week had already traded in, just a bit, right, below down into that weekly fair value gap and pulled back. So wouldn't be surprised to see the markets take off, right? But looking at the lower time frames, because we were looking at this on Monday. I think we didn't switch to Sunday yet we was on Sunday. All right, cool. So just looking at the way this price action came through though, right, we saw a price give a high here short of the highs of February. All right, that bothered me, okay, that we never traded above these highs of February truly on this chart. And then we got a lower low right here in price action, and then we saw price go again, okay, and trade higher, right? We did get a higher high here, right? You could argue we have a higher low here, all right? So boom, lower low than these highs, okay, but respective to here, we got a higher low coming in here. So we saw price hit our key level and then turn around very quickly. Now, here's the thing about reversals, right? Because this would have been a reversal, right? Because price from April 1st all the way to April 7th. So for a whole week, price here was bullish. Sorry, guys. I'm kind of thirsty. But we live, all right? So you got to take it. So all week last week, price was bearish, all right? Down into our key level, right? We saw price hit our key level. We have to be aware of seeing potential price action to the upside. So that's why we would be looking at this as interesting, that we see, highs, and then we get bullish engulfing, higher high. And let me actually pull up the chat as well. All right. So yeah, we pay attention to the fact that we have this bullish engulfing, right? And then we got these higher lows coming in. But I wasn't convinced that price was ready to just trade higher from here. It was, we're going to pay attention to it. But what I wanted to see is that typically when we're seeing a reversal play out, the way we'll see that happen is that price will reach a key level, right? And then you'll get a higher high, okay, or a bullish engulfing, and then you'll get price running out those lows one more time before actually going ahead and continuing and forming a structure like that. So last week, you know, what I don't know if the arrows are, yeah, look, this was last week's chart, right? We were expecting to see price just run one more time down, okay, into that key level, running out these lows that a lot of early buyers would have caught, and then seeing aggressive price action from there. This is directly from last week. And so, of course, it already rewinded. But anyways, we wanted to see that play out. And here on Tuesday, right, 8 a.m., right, Monday's price action was all bearish, and you could have traded that bearish price action based on our weekly outlook, right? You wonder how you get value from getting on market outlook consistently or paying attention to it, right? Maybe I don't send out signals, but just being aware that we were expecting price to trade down to this key level and then trade higher until we reach that key level. You could be confident on sells and bearish price action down to that key level, and then once we reach that key level, right, you could start looking for the bullish price action, right? Reach, no more looking for sells, right? You see price just absolutely, I mean, that was ridiculous, right? On Wednesday morning, this was CPI, right? This was CPI candle, and we don't trade CPI, right? So you wouldn't have been able to necessarily get into the massive expansion. But here on NASDAQ, we were able to trade this because even though price dropped off, and I mean, you could have been Speedy Gonzalez, and maybe you would have traded that, but price gave another opportunity because it came back up into these previous bullish candles before they took out these highs, aka higher time frame breaker block, and we were able to take the sells there. Okay, still being confident in price delivering lower. All right, boom, and then this is where we had that opportunity. So very smooth price action on our expectations last week on DXY. Question is, what do we expect now? Right, so we're gonna go ahead and take it back over to our regular DXY chart, and we're gonna take it down to, let's wipe. Okay. All right. So let's say, of course, our higher time frame objective, as we talked about, was February's highs, right? That was our first higher time frame objective there. And we've already reached that here. But how did we reach it? We reached it with a massive bullish engulfing candle from that weekly fair value gap here, and we've definitely already hit those objectives. However, now we've got a shift in structure. Okay, we've got higher highs, higher lows, and now we've gotten another higher high. All right, so we would be expecting a continuation of this price action, right, as we're looking to potentially break out of this consolidation. So my next objective would be here, the highs of 2023 on dollar. Because if not us, then who? All right. We have the halvening coming up in 6 days. Everyone definitely expects the dollar to die. And I know I'm like the crazy contrarian dude, but like, if everybody expects the dollar to die, why would the dollar die? I don't know. But anyways, either way it goes, all right. That would be my expectation based on this here price action. All right, so now what I'll be looking for is where can price potentially retrade to before I can look for an opportunity above these highs. All right, now of course a key level is going to be the previous highs of February are of course going to be a key level for us to pay attention to. But what is near to these highs of February? We're here on the daily time frame. Here on the daily time frame, we look as though this was our low of the month, is what I would be anticipating this to be. All right, I would not expect price to trade anywhere below these lows if price is truly bullish. So where could price trade back into? I would say, how about this last up candle, right? Before price traded lower. Okay, boom, right here on April 1st. This was a up candle that failed to take these highs of February. And then they dropped lower, bullish engulfing, before boom, they broke out and got above it. So I'm going to want to pay attention to price coming back to the key levels of that candle, right? The high, the mid, the low. And I'm also going to be paying attention to the fair value gap on the right hand side of this, which is going to be this here. Okay, I'm going to be paying attention to this gap, which just so happens to be fit perfectly on the other side of this breaker block, right? So that's what we're going to be paying attention to here. All right, we expect price to, I'm expecting price to want to return to this level before continuing to the highs of 2023. Or I'm wrong and price just absolutely, continues to fall out of the sky. Now, lessons I've learned. Why could I potentially be wrong, right? Because price sold off here to these lows from here, this being a mitigation candle, kind of like a breaker block, right? This is a candle that was an order block before, right? Why? Because it was an up candle. And then we got an engulfing candle down. So price should want to respect this, and we just broke above it, right? So I'm going to be paying it. I can be paying attention to this level right here. Okay. And that's how I've missed setups, missed opportunities before, is because I wasn't paying attention to little things like that in the not price action, but in our strategy. You feel me? So I'm being aware of that. I'm being more aware. So we will manage that as we need to. I have it on this weekly time frame. So if we see anything weird happening, like reactions just straight off top of Monday to take us up here, then maybe what we see is that Monday price action gets up here very quickly. And then we see some choppiness, and then we see the markets want to actually just go ahead and drop. All right. So that's why I say, it's very much a matter of us paying attention and being ready. But those are my considerations. My thoughts, I want to see price get up here above this buy side. So any bullish opportunity that I see forming at the right times, I'm going to be on the sides of the bulls. That's what we're paying attention to here. But I would love to see price come down to these highs of February before we see them continue up to this level. It just looks like at this point, almost like we are closer to those highs than we are to this key level. To this retracement. It's like a 50-50. It's like a 50-50, but not that price is actually closer to retracing for us. So, on the 1 hour, we starting to get some nice bearish shifts in structure and some consolidation playing out here. So maybe we get that break of structure to the downside on these lower time frames, and price plays out how we want. All right. Now, with that being said, continuing to expect bullishness on DXY. However, bonds has reached our higher time frame key level for a while now, right? Which is this monthly fair value gap. Okay, right here. Price has now reached this monthly fair value gap. These lows of this purple candle, highs of this purple candle, lows of this yellow candle. And for those of you guys that are not familiar with why that would be important, it will be a key level that we're paying attention to for them to respond from, right? So just looking at this fair value gap, we've reached our lower time frame, higher time frame objective. Boom. All right, and price is now at a discount of the price action so far this year, all right? Because so far price action has been bearish for the whole year of January. For the whole year of 2024. Not a Fiji commercial. All right. But for this whole year, we've been bearish. And, as far as we like to look at the markets, that's a little suspicious, right? That, we've only gone one direction for the whole beginning, almost like that's a manipulation, right? So now that price has reached these key levels at a discount of the price action of this year, it is potential that we would want to see, not potential, it is likely that what we would want to see is a reaction from here. All right. And depending on the market structure here, I would be expecting a reaction on the level of like them going for a reversal. However, I don't believe that yet, right? I feel as though we still want to see bonds get down below the lows of 2006, 2007. Yeah. And honestly, these are the lows of like the quarter century we're getting to, but whatever. I mean, not the quarter century, the century that we're getting into. So that's interesting. But anyways, yeah, price action looks pretty bearish. All right, pretty bearish, and we still have liquidity objectives to the downside on this monthly time frame. So I'm not necessarily guaranteeing that okay, they're gonna react from here and go for the highs and continue up out of here. I mean, we'll see what happens on clearly that's the higher time frame. But the point being that right now we've just seen them trade below February's lows. We've also now seen them trade into that monthly fair value gap. I would expect some type of reaction, right? Some type of reaction, and for us to see price get back, up into, the imbalance, the premium of this last run of April so far, maybe just over the highs here of April, highs of March, and then see continued price action to the downside. That's what I would be expecting of more so based off of the higher time frame, right? So hope that makes sense. Why does this matter? You guys are probably like, why are we looking at ZB1 exclamation mark? Well, these are T-bond futures, treasury bond futures, and it typically shows the way I learned it is that what it shows me is where the government's willingness to invest, right? To be, what's the word? Cash on, right? Which means, for example, whether they're going to be less likely to be investing, for example, or whether they're going to be more likely to be stacking dollars, right? Or to be investing in the dollars rather than investing in, industry and things of that nature, right? Why does that matter? Because typically T-bonds trends with the indexes, right? Stocks with the stock market, right? They typically trend in the same direction. So given we trade NAS100, given we trade, index futures, we like to look at treasury bonds as an idea of the direction or the strength that those are going to want to go, right? And then we look at the dollar, because the dollar is typically, that is the standard of currency around the world. And it shows us the opposite, right? It shows us the opposite. So if we're looking for bullish dollar, then we would typically be looking to see a bearish bonds market and a bearish index futures market, right? So that's how we use those things. And that's why you'll see me, of course, always be looking at these. So it's interesting where we've traded into here. Like I said, not really seeing too much of a crazy reaction. I mean, we got a daily bullish engulfing, so we'll see what transpires from here. But it is weird, right? It is weird because DXY, like I said, I see more bullish potential here on DXY. So I would want to be seeing more of a bearish one-sidedness or bearish breakdown on bonds, and that could be playing out because again, once we get above these highs of 2023, again, that's another area where it's like I would expect to see consolidation or some sort of a pullback before we see any continued move. So it makes sense that DXY is about to go ahead and hit this high of 2023 while bonds is about to go ahead and hit these lows. Has recently just hit these monthly fair value gap, so we can go ahead and see that weekly pullback, right? Before the price continues in the overall place that I'm expecting. Okay, so it's pretty convenient. Nasdaq went well last week. One second. All right, and we're good to go. All right, so looking at NASDAQ. Man, it's time to get busy now, right? Looking at NASDAQ. Yeah, like a weaker man would look at NASDAQ and be like, bro, this is horrible. You know what I'm saying? Like, I understand, though. I understand. I didn't like it either. I didn't like it either. I did not like it either, trust me. Because on the daily, NASDAQ's really just been consolidating, guys. I mean, let's be real. Nothing's happened. I mean, we've been in the same range since February. Like March was a mess. Okay, that was all price action of March. That's all March's price action in April so far. All right, it's not that exciting. Okay, just being real. A lot of manipulation. I mean, you can't trust anything that's inside this range, basically. That's basically what we're saying. So yeah, but going into the thick of things, right? Because that's what we do. A little perfectionist, as you see. Yeah, so here's the thing, right? Our thoughts on NASDAQ last week. Wanted to see price get back up above these highs of last Thursday. Okay, that's what I was expecting first, was to see price get back above these highs and then go ahead and see a sell-off. But we didn't see that, right? We did not see that. Again, a lot of choppiness last week. As amazing as the moves were, just so choppy for no reason. But they did go ahead and run out the lows here on Monday. Okay, didn't get down to the lows never got to the lows of last week. And never got to the lows. I mean, to the highs of last week. Literally, was just and this was just an inside week, is what you would call this. All right, literally traded inside the range of last week, which means what? There's still a bunch of liquidity sitting above these highs, right, and a bunch of liquidity sitting below these lows. Okay. That's what it means. All right. Now, overall, based on my dollar prediction, clearly I would be looking for bearishness here on NASDAQ. But the point being, we've been bullish forever so far. And now we've just been consolidating. We still can accumulating. All right. So we still can't be super for certain on what type of price action we're going to see. But looking at this daily time frame, Friday finished off as a bearish engulfing, which means now this would be here an order block that we can pay attention to. And if that's an order block, then we should be expecting to see price go ahead and respect the low of this order block's candle. First and foremost, I'm being a little perfectionist right now, guys. All right. Right, that's what we would be expecting here, right? And even if not just off that candle, we would be expecting it off the halfway point at least of that candle. So let's go on to a lower time frame and see what's playing out. On a lower time frame at that same order block, we have price trading up into a fair value gap right now. Okay. And we're seeing response here at the 50% of that fair value gap. You know, price is in an interesting position because we just ranged around last week. These are the type of situations where you can expect a really big Monday just off the rip, especially when we're close to a liquidity level, trading at close to a liquidity level, trading at a key level or one of our key levels to take a trade out. And then on top of that, last week was an inside week and we haven't delivered to any main, target still, right? Still haven't done that. These are the type of weeks where, you know, you can expect, okay, going into a Monday, would not be surprised at all to see very quick price action or big price action to the levels we're expecting. So boom, this is gonna be midnight, and like we said, we're trading above up into this 4-hour level. So I'm gonna want to see how price responds over this next 4-hour candle. Right, there's 22 minutes on this 1-hour candle. On the next 4-hour candle, we got another hour and 22 minutes. I'm gonna want to see how, you know, we close out from here, and looking at this order block as well, because those are the type of things that could be a sign towards a very fast movement to start off our Monday. Right. I mean, for right now on the 15-minute, of course, it looks like prices, you know, got a higher low, got a higher high, higher low coming in. But just looking at this, I just want to kind of get an idea of, out of this range, where price is going to want to get back to before it sells off. That's like all that. That's all that I'm paying attention to. And so maybe it's not this 4-hour level. I mean, it would be nice. So we'll pay attention, like I said, but maybe it is this higher 4-hour fair value gap that we'll have to keep in mind. We also have a 1-hour fair value gap here as well. So if price gets back to either of these levels before they take out these lows right here, I'll be definitely looking to see some type of reaction there and pay attention to those for sure. But of course, given that we have been only trading one direction on the higher time frame, we're in a lot of consolidation right now as of the last month, basically month and a half. Again, NASDAQ, another week of just us having to just take it when we're there, right? We can have our higher time frame perspective, especially when it comes to the intermarket analysis, using the dollar, using the bonds market. So we can definitely use those to have our bias, and now we do have our bias, that we do expect a bearish, you know, we do expect bearish price action on the bonds market and bullish price action on the dollar. But first, what do we expect? We expect the pullbacks, right? We expect the pullbacks first, and therefore, you know, we would be expecting the pullbacks on NASDAQ as well. But I just can't see NASDAQ going for these highs up here without taking out these lows, just because we're so close to them. That's just how I feel. And like I would love to see a reversal on the higher time frame, but we don't have that yet, right? We don't have the information for that yet. So just going to keep in mind for these things that I pointed out here on NAS, and taking a look at Goldilocks, because sometimes, you know, it might be Goldilocks, right? Now Goldilocks, she is also at all-time highs here on NASDAQ, and we're also seeing her have given us a lower low and on the higher time frame, right? Because you would say, all right, on the 1 hour we do have lows here, and then we have a lower low that came in here, and now we're seeing price trade back higher into this range. So again, you know, same situation, of course, would be expecting to see some type of reaction based off of what's happening here on the lower time frame. And gold never took out our objective, right? We were expecting to see gold trade down below, you know, these double bottoms here from Monday, and even down to these lows from the earlier week. But for right now, the one that's in our face are these double bottoms here from last Wednesday and last Monday, that we would expect to see gold get down towards. So again, depending on how this 1 hour candle closes, that might give us some information, because if this candle closes like so, maybe we don't even see them get up to this fair value gap, right? Maybe we don't even see them get up to the fair value gap. So we will see. But, you know, same thing on gold. I'm expecting continued bullishness on dollar, so I'm expecting turnaround on gold. But first, I would expect the bullishness, because first I expect the pullback on dollar. All right, so first I would love to see gold get up into here before taking these levels, and then potentially seeing a sell-off to the downside. Those would be my thoughts here on gold, my thoughts on NASDAQ, and my wonderful thoughts on dollar and SPX. You feel me? So We shall see. We shall see. It's gonna be a good week. Like I said, man, if you guys like these, y'all leave me a comment, leave a subscribe for the channel. If you need help, if you need help, help me. Help me. If you need help learning how to trade, by all means, go ahead and join our free group where you're able to get value, free course, free trading sessions, being able to get questions answered, anything of that nature. Make sure to go ahead and join that. Subscribe to the channel. And let me know, do you guys like the live sessions? Do you want me to do more the live session? Or, I've noticed some people even give me the feedback that they just like the recording, right? So maybe I'll just record these and I'll just post it before 8 p.m. on Sunday, so you guys let me know in the comments what your feedback is. If you made it this far, you really gain, you really guild, right? I don't even got to say gain, you really guild, you feel me? So appreciate you, guild, and I'm gonna see y'all later.